kind of simplify it. Okay, I said, okay, I'll go back in time and try to see what happened in certain states where we had high inflation, and what happens if we have the high inflation rate. And this is the 1942, which is also magically the same as 2022. So what really happens is that you see the inflation peak and the stock market bottoms around that area, and you have this kind of grace period where the inflation comes down, and this kind of encourages people, creates a good economical environment, because when you think that the prices are coming down and inflation is coming down, and people were like already suffering for the prices going up, and everyone was like, okay, like everything is going up, I should buy a car, and they keep buying the cars, buying the Teslas, and eventually when the prices go down, like a Tesla cuts price or the companies cut price, you are waiting to buy a house and the mortgage rate keeps dropping, and you want to be involved, you want to buy it. So you hold on to your cash at the first stages, and you wait for like an opportunity to jump back and buy the house, buy the car, whatever the thing that you wanted to buy. So I remember reading that there is 5 trillion cash is waiting on the sidelines to jump back. And also same with the crypto markets, there is so much stable coins waiting to jump back to market, because everyone is just waiting for the dip to buy back, and it creates this kind of a buzz whip effect where like inflation comes down and then it again starts to rise up with the demand coming back, and then Fed has to raise the interest rate again. And after the peak, there is another, eventually around 2 years, like end of this year. Then, if you think that the 2022 was the peak, end of 2023 seems like a good point, right? Like, okay, it should be the point, we should be careful. And when you go to the 70s, and this is the gold, let me close the gold and the interest rates, and you kind of see the nearly exact pattern again. Actually, you see that the inflation starts peaking, and while the S&P is like bottoming out, and it again takes around 2 years approximately, around those years, and then you have the inflation revive again, and it takes like 4 years to clean it out of the system where it can peak again and drops. When we embed this thinking into what happened with us, is that you can see that inflation, I remember reading the lots of economical writings or discussions if the inflation peaked or not, and because everyone there, they know there's both previous cycles, so people are like, okay, waiting to buy the dip, right, basically. And they bought the dip here with the inflation peaking, and they got punished. Like the market punished them for like one last time in September. Like they said, okay, this is not gonna have it. So I think there is now like a little bit front running going on, and there is some change in the market. Well, this is not really 100% correlated, and if you open the gold, you can see that it's really goodly correlated with inflation. Like inflation comes down, the gold comes down, inflation goes up, gold goes up. I'm thinking there is some front running or some manipulation to really make people suffer from the gold. Now everyone talks about the gold. There is so many YouTube videos that how great is gold. I was lucky to buy around bottom levels, and I sold it I think a few days ago, because I was buying thinking that it will continue to go down, and I kind of spread it out, but once it rallied so fast I had to stop. But what I did is that I went back and go through that Dow Jones inflation and gold period charts, and I tried to create a forecast how much time it took for these peaks to bottom out, or the market to bottom out, approximately giving me some dates, which these are just days to watch for It's not because they are gonna happen, but it makes you to keep the possibility in your head alive.